Welcome back to the On the Money YouTube channel powered by Allied Wealth. I'm your host, Ryan Wheelis. Are you somebody who's talking about an annuity in the sense of a big bonus or a guaranteed lifetime income benefit? Folks, you might want to listen up to this video because in this video, I'm going to decode the complicated formulas these insurance companies arrive at and help you buy the right annuity instead of the wrong annuity. So what's going on, folks, is there's a lot of companies out there offering, one's offering a 25% bonus up front day one, another one a 20% bonus up front day one, another one a 10% bonus up front day one. And you're going, wow, man, if I can get 25%, especially considering I lost money in the stock market last year, that sounds pretty good. But what we've got to understand is these bonuses are often used in a calculation that the insurance company uses to provide you a guaranteed monthly paycheck for as long as you have breath in your body. All right, so it's a guaranteed lifetime income benefit, guaranteed minimum withdrawal benefit. There's a lot of different names they use for these programs, but what these are is the ability to have guaranteed income for life. And there's a lot of gimmicks and sales jargon that they use to lure your dollars in, all right? But there's one thing you got to know above all else. It doesn't matter if there's a 25% bonus, a 20% bonus, a 10% bonus, an 8% guarantee. On my paper here, I've got an 8.25% guarantee, or a no guarantee, or a 4% guarantee plus whatever the index does. All right, this stuff doesn't matter, folks. What matters the most, and really the only thing that matters, is for every dollar you put into one of these annuities, if you're buying it for guaranteed income purposes, okay, for every dollar you put in, how much income do you receive? So let me show you something really interesting here. This is a client. He's age 71. All right. He's going to wait until 73 before he turns on guaranteed income for life. So he's got a 2-year deferral period. All right. And he's going to use $300,000 as his deposit in these annuities. Okay. And so he came to us and he was sold on one company's annuity because the company offered a 20% bonus up front day one, which sounds really good, folks, okay? Because again, this guy lost money in the stock and bond market last year and he's thinking, hey, I can get back to even with this bonus. In addition to that, they have an 8% guarantee, all right, 8% guaranteed roll-up rate, and they have a fee of 1.1% per year, okay? So that's basically what he was looking at when he came to see us. And he was looking at which one of these programs provides the highest guarantee of income, all right? So he wanted us to shop around and look at other scenarios for him just to kind of see what was out there. And we went to market and here's what we found. We found another program that has a 25% bonus, okay? And it has a 4% guarantee plus index growth. All right, so what that means is the 4% guarantee is stacked. It's called a stacking roll-up rider. All right, so he gets a minimum 4% guarantee of growth, and if the index, and this index annuity provides any growth as well, it gets stacked on top of that 4%. So for instance, if the index does 6%, his income benefit base goes up by 10% that year, okay? And that one right there, by the way, has a, this one has a 0% fee. All right, so that's really attractive. I get a 25% bonus, get a 4% guarantee plus index growth, and I pay no fees whatsoever. Ryan, that sounds really awesome. And folks, it does, okay? The last one is not as sexy, all right? The last one only has a 10% bonus, all right? But the roll-up rate is higher in the sense it's an 8.25% roll-up rate. So that's the highest of the roll-up rates from a guaranteed standpoint. And this one has also a 1.10% fee. All right. So how on earth do you decide which one of these to put your $300,000 in, assuming a 2-year deferral period of growth, before you activate the guaranteed income? Well, folks, what you got to look at is what is the guaranteed income from these various programs. Well, from the first one here, it is $25,950. All right. So if this client puts in $300,000 and waits 2 years, his guaranteed payout from that annuity is $25,950 guaranteed to him for the rest of his life as long as he has breath in his body. All right. What's interesting is the one with the 25% bonus and the 4% guarantee plus index growth stacked on top. It's called a stacking rider again, by the way, with no fee at all. All right. Its income is $24,650 per year. All right. Well, that's a pretty good difference over a lifetime of income using the same $300,000. So the one that's got the biggest bonus on it and no fee actually has lower income than this one with a fee on it and a lower bonus. All right. Lastly, you go to the far right here, the one with the less sexy bonus and the one with the highest roll-up rate of 8.25% and the same 1.1% fee as this one. And the income you can get out of this one is $29,250 per year. Okay, using the same $300,000 deferred for 2 years of growth and activating income in 2 years. All right. So what you'll see here is clearly this annuity right here has the highest guaranteed lifetime amount of income for every dollar you invest. All right. So what I'm trying to illustrate to you here, folks, is it doesn't matter how big the bonus is. It doesn't matter how big the roll-up rate is, and in some cases, it doesn't matter what the fees are, all right? What matters the most is for every dollar you put into one of these programs, how much guaranteed income do you receive? And it may not be the program that's got the biggest bonus or a big bonus. It may be the smallest bonus and the highest roll-up rate. But folks, what we do here at On the Money is we help you decode the complicated formulas and math the insurance companies use to arrive at these payments to help you figure out the least amount of money possible to put in one of these programs to provide you the guaranteed lifetime income you need, all right, to have this income for life. So for every dollar you invest, the only thing that matters is for every dollar you invest, how much income do you receive? And it's oftentimes the ones with the lower bonuses that have more income, all right? Not always the case, but in this particular case it is. And folks, if we were to change these numbers from 71 down to maybe 61, this whole entire matrix here could change. We could be talking about 3 different products. So it also matters about your unique individual situation, how old you are, whether you want to do add a spouse on for joint life income, how much money you've got, how long you want income for. A lot of factors go into this calculation, but here again, at On the Money, we help you decode the complicated formulas the insurance companies use to arrive at the most important thing, and that is how much income do I get for every dollar I invest. Folks, thanks so much for tuning in today. If you like the content we're putting out, give us a like down below, hit the subscribe button, and we'll keep alerting you. We put out awesome videos just like this one.